Hello everyone, let's break down a statement called a weak US bond auction. So, what does this mean? A weak US bond auction means fewer investors showed interest in buying US government bonds. That's a problem because the government relies on borrowing money by selling these bonds to cover its fiscal deficit, which is the gap between what it earns and what it spends. Now, here's the catch. When investors see the US borrowing too much, they start worrying about future inflation, rising interest rates, and the overall health of an economy. Because when US borrows too much, a lot of foreign investors, what they'll do is they will lose the confidence in the US, and if they don't get any borrowers for their bonds, which means there is no demand, and when there's no demand, the confidence between the investors gets panicked out. They start selling their positions, which will eventually lead the currency to depreciate. For that matter, if the US currency goes from 100 to let's say 90, then the lot of situations might take place. So they either back off or demand higher returns to take on that risk, which says that higher return equals to higher risk. So this pushes up the bond yields, and which also raises borrowing cost for all the business houses, home buyers, and even the government itself. Plus, a weak auction sends a signal that global market that confidence in the US debt is fading, and that can lead to stock market volatility. रातों रात currency उड़ जाती हैं, and so yes, a borrowing sounding bond auction can actually shake the entire financial system. Thank you.